What's up, guys? Stacy here from Becoming Financially Fit, and today we're going to talk about some topics to help you plan for your financial future going into 2022. If you haven't been to my channel before, I make topics about personal finance, financial literacy, savings, investing, and I also make some videos about entrepreneurship as well. So if you're interested in any of those topics or you want to see more videos like this in the future, make sure you subscribe to the channel and don't forget to hit the bell to be updated anytime I post new content. All right, let's get into it. So when you're planning your finances for a new year, there's always a lot of things to think about. You have your New Year's resolutions, you have your big purchases that might be coming up within the next 12 months. There's a lot of different things that we need to discuss and need to talk about, but this video is specifically going to help you plan all of that out so you guys can be prepared going into the new year. First things first, it's going to be a budget. This thing is going to be your holy grail, and it's going to let you determine exactly what you can plan for into the new year. If you don't have a budget, you don't have a plan. So make sure you have your budget in place to ensure that when things come up, whether that be emergencies or big purchases or a down payment or a new car, you're able to meet those needs without any question. A lot of people that don't have a budget kind of just live month to month, and they don't really know where their money is going. This is a huge no-no, and it's a big mistake if you're actually trying to plan for your financial future. Having a plan in place lets you set goals, specific SMART goals, to help you achieve your financial goals in the future. Now that you have your budget in place, the next thing we're going to talk about is goals. Now that you're able to see how much money you're going to have left over on a month-to-month basis, you're going to be able to plan out exactly where you want to put your money after all of your bills are paid, all of your debts are paid, and even your rent and things like that. So when we're talking about goals, we need to be realistic with ourselves. Some of the things that I would set aside in my personal budget are going to be things like investing. Obviously, I may have a job with a 401k, and I may have some other things set aside like a 529 plan, but setting aside money for your investments is essentially like paying yourself first. Every time you get money, make sure some of that is directed directly into an investment account, whether that be a taxable account or non-taxable, retirement account, something to that effect. But make sure you have a specific amount that no matter what, let's say you get paid every 2 weeks, it goes directly into that investment account. Those investments can be in a bunch of different things, but the goal here is really just to make sure you're paying yourself first and putting that money into investments. Another thing to look at would be your emergency fund. Obviously, setting aside your budget, you need to be prepared for things that are going to come along. Some of these things are going to be emergencies that you haven't really prepared for. Let's say your car breaks down, or something happens with your roof or something like that. You need to have an emergency fund set aside. The first part of that emergency fund is to set aside $1,000, and that $1,000 is going to allow you to do a couple of different things. Let's say you have an unexpected, tire that blows out or something like that, and it costs a couple $100. That's not going to affect your budget because you have that emergency fund set aside. The ultimate goal with an emergency fund is to set aside at least 3 to 6 months of your normal monthly living expenses. And the only way to come up with that number on a month-to-month basis is by making sure you establish that budget, like we talked about in step number 1. Moving on to some of the bigger items. Let's say you are wanting to purchase a home, or you know that you need to buy a new car or maybe a new laptop. These are all going to be things that you need to plan out now. And what I would do if I were you is I would set aside in a savings account. And these are going to be things that you're going to purchase, let's say, or prepare for within the next year. Set this aside in a high yield savings account that's separate from your primary bank. A lot of individuals have either a checking account or a savings account with their main bank where all of their direct deposits go to. What you should try to do is try to go online or find another community bank or something like that that has a high yield savings account where you can set aside money on a month-to-month or a bi-weekly basis to save up for these things. Let's say if you know that you want to get a new laptop at the end of next year, and that laptop costs $1,200. Based off of a month-to-month analysis, you're going to need to have $100 every month or $50 every paycheck if you get paid twice a month. Those things like that are going to be simple ways where you can budget for that, put it into your budget, and deduct from that automatically into that high yield savings account on a month-to-month or bi-weekly basis. Then at the end of the year, you're going to have that money that you need to go out and make those purchases. Another big item to think about would be, where does your current net worth stand? And An easy way to get your net worth is by taking all of your assets, subtracting out all of your liabilities to get your total net worth. If that number is negative, then you got some work to do. If it's zero, then you still have some work to do. And if it's positive, you guessed it, you still have some work to do. The goal for every individual should be to increase their net worth consistently year over year until you get to a point where your assets definitely outweigh your liabilities. And not only that, but then those assets are providing a monthly or a quarterly or an annual cash flow that you really do not need to work anymore. Once you get to this point, then you can retire. But until you get to that point, you're going to need to track that number as closely as possible. One way to make sure that that number keeps increasing consistently is to lower the amount of debt you have. Things like high interest credit cards or personal loans or car payments or even a mortgage. All of those things are going to be debt. And the goal for you is to make sure those debts have interest rates as low as possible. And for things like high interest credit cards, you're paying those off in full every month. If you can't pay those off in full every month, then the goal would be to set aside a plan and make the minimum payments on everything. And then the highest balance that you have, put some extra money to that. And you're going to be able to budget for that in step number one, like I said, within that budget. Let's say you have, $500 in debts, payments, minimum debt payments each month. Let's say you make all those payments, look at the highest balance or some of the things that you want to pay off and put some extra money to those. You'll start to see that over the course of a couple of months that those balances will start to decrease more and more. And then you'll be able to increase your net worth. Just remember that anytime you put money towards a debt, it's like you're investing that money and getting a return. Let's say if you have a credit card that's 20%, you're trying to decide if you want to either invest that money or you want to pay off some debt. Think about it like this. If you can invest that money into the stock market or however you like to invest, and you can gain more than 20% return on that investment, which is very, very rare in most cases for the normal individual, then you should invest it. But if you can't consistently get 20% returns on that money within the stock market or other investments, then that should be going to debt. Because when you pay it off, you're getting a 20% guaranteed return on those interest payments. The main thing to think about when going into the new year is to make sure you have a plan. Set those resolutions, make sure you have your goals, and make sure you have a budget. Everything else will line up if you follow the steps that we talked about today. But before I get out of here, I have a question for you guys. Do you guys have a budget in place right now? Or are you thinking about doing it? And second question, do you guys have any plans for 2022, like buying a house or a new car or anything like that? Drop a comment below and let me know what you think. But if you got some value out of this video, make sure you drop a like and make sure you subscribe to the channel to see more videos like this in the future. And talk to you guys soon.